Hey traders, thanks for paying attention and tuning into the Trade of the Day. It is brought to you by Day Trade the World, the world's #1 day trading firm. Join today. Click that QR code to find out more. Look, today was pretty easy. My eyes on the NASDAQ. We had the CPI come out. We didn't know what it was going to do, so we bracketed some orders. We went long off that print. So again, what we meant by bracket was I had some orders set up. Here's a 20-minute chart here on the Qs, right? Or well, it's on the triple Qs. And why is it TQQ? It's triple the leverage. So you're going to see here, just for an example, 2.6% the NASDAQ is up. If you're going to look here, 7.7. So it's times 3. So you get a little bit more of a move. Plus, the price is a little bit better, right? You're only at a $35 handle instead of paying the Qs in the multiple hundreds. So a little bit easier to trade, a little bit better for us day traders, I find anyways, with the momentum. So let's just look over here real quick. If you look back here, this is 34.30. It goes all the way back to August 1st and even beyond that, 29th, then again here on the 1st and the 2nd, where we sort of dumped around at this level of 34.30. So now let's look at our day chart here. This is 34.30 right here. So we were like, all right, as the number was opening up here, so it was like 829 or even earlier, 825, you're kind of just dancing around a little bit of a low level here of 34. So initially I had a bracket to say, hey, if we take that 34.30 out, then we want to push a little bit long on that trade. But I didn't use 30 exactly, I used 50. So for some reason, some sort of, and it was right before, there's a couple big spikes there, right before the number came out, we actually got in, so you're going to see two trades. So one is in, and then we got out right away because we were in before the number. So that's why this looks like I got in and sold, but it was about a 15 to 20 cent hit, because that's another thing I want to talk about with the trade of the day. If you're in a trade too early, something got triggered incorrectly, then the best thing to do is get out. We went long and then we got out. So we take the L early because it was a bad trigger. The market just moved up. It's not that the trigger was bad, it's just the market moved without the number, right? And so we put that trigger back in. We get out, then we get right back in. Then boom, there goes 34.50, right? So again, all we're doing is waiting for this level to hit. We also had a bracket order down lower if we took out this 33.50, which was the bottom. That never happened, so we don't have to worry about it. If the number came 10 or higher than the 8.7 expected, even higher than the 9.1, then we would have hit the short. Instead, it's a long. So boom, right up to the upside. Our first out's here, a little bit out at 35. This is all in 1 minute. So as you can see, this is a 1 minute chart. So maybe there's 1 minute in there. This is the second minute. And then the third minute's all the way to the upside. So again, blast it to the upside because it's the triple Qs. We're already getting 2, 3, 4, 5% return on our money. Like it's a great move to the upside. Boom it here, and then all of a sudden we just start emptying it out. After the move, pulls back in, and we actually get pretty much the top ticks here, 36.25, 36.20, and if you look over here, this helps us again on the 20-minute chart. So we're run in, that's the level right here, same level, so we run into that 36.30, 36.40 level that we've already hit on big moves up, right? So we're just coming into that area. So from down here to up there, and this is what it is, out as we go, and then really no more outs. You're going to see a little try here. So as the market started to rally back 2 days high right there, we actually tried one more short. And this is the thing about risk to reward, which is why it's important for this to be the trade of the day. I feel like we go short there, and then we get out about 10, 15, 20 cents later. So the risk on the short, when we're already in a bull market here today anyways, that's a big risk to take, and I didn't want to take it. It turns out to be wrong. We pull all the way back down to 36, but the point is that as soon as we're wrong, we're able to get out. But look what we do when we're right. We cash our chips in, cash them again at 36, 35.75, then out at the top. So as you can see, this is like a $2 move to the top side, or a little bit less than that, around $2, $1.80, something like that. And our risk on the short is a simple 10, 15, 20 cents. So again, if you're going to trade on CPI, I think you could have done this on anything, SDS, any of those levered S&P 500 ETFs as well. I've been looking at the NASDAQ, so I chose that name and found some key levels. Again, you do a little bit of work, you get prepared for the numbers. So every CPI, we're going to be looking at something like this. Unemployment rate, you could do the same thing. It's 8:30. I suggest looking at ETFs rather than individual stocks just because of the liquidity, and it's your trade of the day.